Today's topics from Reuters Breaking Views: how financial repression may prove helpful and sanctions leave Iran with difficult choices. Two of the stories Breaking Views are looking at today. Peter Tarl-Larsen joins me now. Financial repression, Peter, looks like it's here to stay. But just to explain first what Edward Harras is talking about when he talks about financial repression.
Really, it's a sort of catch-all term for policies that governments can pursue to essentially do two things: either to lower their cost of borrowing or to basically increase the market for their debt. And so, and historically what countries have done is, in times of war, they've kind of gone on a patriotic drive and encouraged people to buy war bonds, which have then basically paid not much of a return.
That's the nice way of saying it, though, isn't it? Because Edward says here, a way of encouraging or forcing investors to buy sovereign debt at unattractive prices. Yeah. I mean, that's it, right? Yeah, that's the bottom line.
And it sounds, I mean, repression has all kinds of negative connotations, and obviously for investors it's not great. I mean, one of the interesting historical studies that Edward talks about is the US, where some economists have studied it and worked out that between 1945 and 1980, the real rate of interest that the US government paid on its debt was minus 3.5%. So it was basically it was ripping off kind of banks and investors, people who bought US debt. Now, since 1980, obviously we've had cross-border capital flows, we've had free markets, we have this idea that basically everybody should pay a decent return, but we seem to now be returning a little bit to the idea that maybe governments can strong-arm banks and pension funds and insurers and so forth to buy government debt at unattractive rates.
And it looks like it's going to continue.
It looks like it's going to continue, but I think Edward's point is it may not be that bad. I mean, it sounds unattractive, and obviously it is unattractive compared to what we used to, but if the alternative is a hard default, then actually this sort of soft default, where you basically you over time you erode the value of people's investments by just paying them a sub-market return, might be the best alternative.
Okay, and then this other story, Yuna Galani in Dubai takes a close look at how sanctions on Iran can impact the country, the people, and inflation and the currency, of course, are two ways.
Yeah, I mean,
and that's where it's going to hurt.
Well, we're not quite clear how the sanctions are going to work. I mean, obviously, the European sanctions potentially have quite a big impact. But if Iran can find other buyers elsewhere for that oil, then the impact may be softened somewhat. What's clear that oil is that oil is very important. 60% of the Iranian government's income comes from oil exports, and it does have some. At least as far as we can tell, it has some fairly substantial foreign currency reserves, something north of $100 billion, although that may well have come down in recent months. So, but where you can really see the pressure is on the currency, even though the official rate sort of hasn't appreciated that much. The market rate definitely seems to be quite a bit depreciated. So it seems to be quite a bit lower. So it puts them in a difficult position, because if they allow the currency to depreciate, then you get inflation and potentially have problems there. So it's even though the
inflation is already a problem,
and inflation is already a problem. So even if the impact is not obvious, it definitely makes the Ahmadinejad Authority, it makes life a bit difficult for them.
Okay, very good, Peter. Many thanks for that. Peter Tarl-Larsen. If you want to watch our US show every day, 12:30 Eastern, 17:30 GMT, I'm Axel Threlfall. This is Reuters.